Welcome to Know What You Are Investing podcast, where we decode the world's top companies, what they do, how they grow, why it matters. In today's episode, we dive deep into NVIDIA's 2025 shareholder meeting, a moment that redefined how we think about infrastructure in the AI era. From explosive 114% revenue growth to the rise of AI factories, from agentic AI to sovereign infrastructure. This isn't just about chips. It's about who controls the next digital economy. Let's decode it.
Welcome to the Deep Dive. Today, we're really digging into NVIDIA, not just their reports, but this central question that sort of defines the AI era, right? How does a company get this dominant?
Right.
And maybe more importantly, how do they plan to keep that lead? Especially with all the global pressures, the ethical questions mounting up. Their 2025 shareholder meeting is just around the corner, so there's a lot of buzz, you know?
It's a huge question, absolutely huge. And for anyone in tech, I mean, whether you're an engineer actually building AI models or you're an investor trying to figure out the market where NVIDIA is going, their financial health, it's critical information.
Yeah.
This goes way beyond just like quarterly results. It's really about understanding the engine, the core engine driving this whole AI revolution and the roadmap they've sketched out.
Exactly. So our mission today basically is to cut through the noise, all the corporate speak, the dense legalese, and NVIDIA's 2025 annual report, the proxy statement, and that big Form 10K.
Yeah, the heavy stuff.
We want to pull out the really important bits, the things that matter to you, their strategy, their money situation, how the companies run, and, you know, the challenges and opportunities they see ahead. We'll boil it down. Okay, let's unpack this.
Let's do it.
So first up, NVIDIA's dominance in AI. It's undeniable. And their financial performance. Wow. The company has really changed, hasn't it? They started as a GPU pioneer, everyone knows that, but now they call themselves a full-stack computing infrastructure company. What does that actually mean strategically?
It's a massive shift. More than just, branding. It means they've pulled everything together. Their GPUs, obviously, their CPUs like Grace. Their NVLink, which is that super fast connector, letting GPUs work together like one giant brain.
Right, the interconnect.
Exactly. And Spectrum-X networking, which is vital for moving all that data around in these huge AI systems. And then tying it all together is their massive software stack, especially CUD. Yeah. So it's not just parts anymore. It's a whole unified system.
Sure.
Optimized, they say, for every stage of AI. Pre-training, post-training, inference, reasoning. The works. It makes them way more than just a chip company.
And they have this term AI factories,
Yeah.
these huge AI infrastructure setups, describing them as multi-billion-dollar projects. That sounds like it ramps up the stakes quite a bit. You need performance, reliability, long-term support.
Absolutely critical.
From an investor point of view, what are the risks there? Or the opportunities? Does that sheer scale ever become like a liability?
That's the multi-billion-dollar question, isn't it? The opportunity is just vast. They're basically selling the essential tools, the picks and shovels, for this AI gold rush. But the risks, well, it's the huge capital needed, both for NVIDIA and their customers.
Right.
What if AI demand cools off a bit? Or, a serious competitor finally breaks through? These AI factories, they need to run flat out to be efficient. Any big slowdown could really hit their margins. So yeah, they're betting big. Their customers are betting big. Yep. But NVIDIA points to their leadership in every AI phase, their huge ecosystem, the programmability, their long track record, basically saying you can trust us with these massive bets.
And looking back at their history, it's kind of amazing. Inventing the GPU in '99, launching the whole PC gaming thing, then CUD in 2006, which, as you said, really set the stage for modern AI.
Yeah, foundational.
Then 2012, AlexNet wins that ImageNet competition using their GPUs. It's called the Big Bang of AI. It feels like they were building the highways before most people even knew cars were coming.
That's a great analogy. And they just kept building. 2017, the first Tensor Core GPU specifically for AI acceleration. 2018, their chip for autonomous driving, the SU. 2020, they bought Mellanox, boosting their networking, leading to DPUs, data processing units.
Right, networking piece.
And then most recently, 2023, the Grace CPU, aimed at massive AI and high-performance computing. And here's a fact that surprises a lot of people. Over half their engineers work on software.
Really? Over half?
Yeah. Given their hardware fame, it's surprising, but it's absolutely critical to that full-stack vision. They're not just selling silicon, they're building the whole operating system, the whole environment on top of it that creates this incredibly sticky ecosystem. It makes it really hard for competitors to just swap in their own chips. It cements NVIDIA's control.
Okay, let's dive into the numbers for fiscal year 2025 because they are just, well, breathtaking. Revenue up 114% year on year, 114% to $130.5 billion.
Astounding.
When a company grows that fast, are there potential red flags? Could it strain their supply chains? Is competition bound to catch up eventually? What's the counter argument to this seemingly unstoppable train?
That's a totally fair question. Growth at this speed is incredibly complex to manage. Supply chains are definitely a constant worry. And yeah, competitors, AMD, Intel, even custom silicon efforts from the big cloud players, they're always there, always trying to catch up. But NVIDIA's counter is that deep ecosystem, especially CUDA. It's a huge barrier. Plus, they keep innovating. The Blackwell architecture is coming next. For now, they seem to stay a few steps ahead.
And that growth flows right through the financials. Operating income up 147% to $81.5 billion. Net income up 145% to $72.9 billion. Just wow.
Big across the board.
And breaking down revenue by market, data center is clearly the beast here. $115.2 billion in revenue, up 142% from the previous year.
Yep. That's the main engine. Driven mostly by their Hopper architecture, the chips powering all these large language models, recommendation systems, generative AI, all the stuff you hear about constantly.
But other areas did well too, right?
Oh yeah, definitely strong performance elsewhere. Automotive was up 55%, hit $1.7 billion. Professional visualization, think industrial design, movie effects, that was up 21% to $1.9 billion. Even gaming, their original market, was up 9% to $11.4 billion. Still growing, even if it's a smaller slice of the pie now.
And cash flow. Looks like cash from operations shot up, which makes sense with that revenue growth.
Wow.
But they also use more cash in investing and financing activities. Lots of sheer buybacks, it seems. Active capital management.
Right. Returning value to shareholders, managing their capital structure.
And just a reminder for anyone tracking the stock, that 10-for-1 stock split back in May 2024, all the share numbers you see in these reports are adjusted for that split. So don't get confused by older figures.
Good point. And another important detail for the future outlook, their inventory and supply commitments. They have outstanding inventory purchase and long-term supply and capacity obligations totaling $30.8 billion.
$30.8 billion.
Yeah, it's a massive number. And it increased from the prior year, mainly because they're locking in capacity for new products, especially that upcoming Blackwell architecture. It signals they're pretty confident demand is going to stay strong for the next wave.
So boiling it all down, what does this mean for you, the listener, whether you're an investor or an engineer? These aren't just numbers showing growth. They show a fundamental shift in the tech landscape, led by NVIDIA's AI stuff.
Right. They're not just selling parts anymore. They're selling, like we said, the essential tools for the AI gold rush, picks and shovels. And because they control so many layers, hardware, software, networking, they're set up to capture value all the way through.
The key insight seems to be that transition from component supplier to, indispensable infrastructure provider. That creates some serious competitive advantages, some real moats, assuming AI demand keeps going crazy.
As long as that demand holds, yeah.
Okay, that kind of growth, that foresight, it's impressive. But it also brings up questions about accountability, right? Who's really in charge of such a powerful company? Which leads us perfectly into our next topic, corporate governance and what it means for NVIDIA shareholders. The annual meeting is set for June 25th, 2025. 3 main things on the agenda.
That's right. First, electing 13 directors the board has nominated. Second, the advisory vote on executive pay, the say-on-pay vote.
Ah, yes, say-on-pay.
And third, approving PricewaterhouseCoopers, or PwC, as their independent auditor for the next fiscal year, 2026. Pretty standard stuff for an annual meeting, mostly.
Looking at the board itself, they make a point about diversity. 5 women directors, 4 ethnically or racially diverse, and they talk about refreshing the board. 4 new directors appointed, 3 retired since 2020. Trying to balance experience with new ideas, it sounds like.
Yeah, keeping things dynamic. And they have this detailed director skills matrix. It shows they're specifically looking for certain skills on the board, things like senior leadership experience, operations, deep industry and tech knowledge, finance, and importantly, understanding emerging tech and business models.
Makes sense for a company like NVIDIA.
It's a very tailored approach, not just generic board seats.
Now, executive compensation, that's proposal 2, the say-on-pay. The board argues their policies work. They say it's about paying for performance, offering competitive pay, aligning exec interests with shareholders for long-term value, and being simple and transparent. They really stress that a big chunk of exec pay is at-risk equity. Things like PSUs, performance share units, and RSUs, restricted stock units. Basically, stock awards earned over time, tied directly to how the company and its stock perform. Seems like they want skin in the game.
Absolutely. That's the goal, incentivize long-term thinking, not just short-term gains. But, okay, here's where it gets really interesting. The shareholder proposals.
Ah, okay. Lay it on us.
Proposal 4 is about supermajority voting rules. Now, get this. The board actually recommends voting for this proposal.
Usually boards resist changes like that.
Exactly. They're following up on a non-binding shareholder vote from 2024 asking them to remove these provisions. So removing supermajority rules makes it easier for a simple majority of shareholders to make changes. It actually increases shareholder power, potentially making the board more responsive.
Huh. That is interesting. But then Proposal 5 seems to go the other way. It's about making it easier for shareholders to call special meetings. A stockholder proposed it.
And the board recommends voting against it.
Okay, so why the resistance there?
Well, their argument is basically, we already have a decent system. Stockholders who own at least 15% of shares and have held them for at least a year can already call a special meeting.
15% for 1 year. Okay.
They argue that getting rid of that one-year holding period could let, quote, a minority of stockholders who have not held a financial stake for a meaningful period of time to call special meetings and waste NVIDIA's resources. Essentially, they worry about short-term activists disrupting things. It's that classic tension, shareholder rights versus board stability.
Got it. And Proposal 6, director resignation.
Yeah, this one asks for a policy where a director has to resign if they don't get a majority vote in an election. The board recommends against this, too. They argue their current policies already make directors accountable enough.
So quite a mix there on the proposals.
It really raises a question for you, the listener. What does the board's position on these proposals signal about their view on shareholder power versus corporate stability? It shows this delicate balancing act they're trying to perform between being agile and responsive and protecting the company from what they might see as short-term disruption.
Right. Finding that balance. Okay, let's shift gears again. Let's talk about responsible business practices. How NVIDIA handles things beyond just the tech and the money. People, supply chains, global risks.
Yeah, this is increasingly important. They clearly focus on human capital, their employees. They flat out say employees are our greatest assets.
You hear that a lot, but what's the evidence?
Well, the numbers are pretty compelling. Around 36,000 employees, 38 countries, get this, 82% are in technical roles and 51%, over half, have advanced degrees. This is a seriously high-skilled workforce.
Wow.
And recruitment. They highlight diversity recruiting efforts, and maybe more telling, over 41% of new hires last fiscal year came from employee referrals.
That usually means people like working there enough to recommend it.
Exactly, and it likely contributes to their incredibly low turnover rate. Just 2.5% overall in fiscal year 2025. That is almost unheard of in the tech sector, suggests very strong retention.
Truly remarkable. What about their supply chain? Ethics, human rights, that's a huge area for tech hardware companies.
Definitely. They mentioned being a full member of the Responsible Business Alliance, the RBA, since way back in 2007. And they expect their suppliers to follow the RBA Code of Conduct.
So standards throughout the chain.
That's the goal. They also aim to use only conflict-free minerals, gold, tantalum, tungsten, and tin, the 3 TGs. And they even did an independent human rights impact assessment last fiscal year to check where they stand and guide their strategy. Seems proactive.
And the AI itself, given how powerful it is, what do they say about using it responsibly?
They've laid out trustworthy AI principles. It covers things like making sure AI models comply with privacy laws, perform safely, are transparent about how they're designed and what their limits are, trying to minimize bias, and ensuring fair access to the benefits of AI.
That's a pretty comprehensive statement. Important as AI gets everywhere.
Hugely important. And on the environmental side, there's the Earth 2 initiative. Kind of cool, creating a digital twin of the entire planet to help predict climate change.
Using their own tech for climate science.
Right. But maybe more practically, they also focus on making their own products more energy efficient. They point out that NVIDIA GPUs powered 8 of the top 10 systems on the November 2024 Green 500 list that ranks supercomputers by energy efficiency. So their core tech is actually helping make high-performance computing greener, even though it uses a lot of power overall.
That's an interesting angle. But okay, innovation, ethics. It all bumps up against harsh realities, right?
Yeah.
External pressures. How do they talk about navigating regulatory risks, geopolitical stuff? That seems like a minefield.
It absolutely is. They state very clearly they're subject to complex laws, rules, regulations, and political and other actions all over the world.
Okay.
And here's a critical point: the risk from increasing use of economic sanctions and export controls. They're very direct about this. They say changes from the U.S. government may in the future impact demand for our products or services.
Especially in places like China.
Exactly. China, the Middle East, other countries they classify as Tier 2, they even mention the possibility of needing chip tracking and throttling mechanisms built into their products.
Wow, tracking and throttling.
Yeah, and there's another risk. Customers outside these restricted regions might start designing out U.S. tech just to avoid the headache of complying with all these complex rules. That could have a ripple effect across the whole industry.
That's a huge potential issue. And it's not just export controls, is it?
No. They also acknowledge regulators globally, EU, US, UK, South Korea, China, are taking a much closer look at competition in the AI space. When you're the leader, you get scrutinized.
The price of success.
Pretty much. They also briefly mentioned the ongoing risks of IP lawsuits, intellectual property fights, and highlight their cybersecurity measures, noting that the Board and Audit Committee keep a close eye on that.
So connecting the dots, NVIDIA isn't just pushing tech boundaries. They're simultaneously trying to navigate this incredibly tangled web of global rules, ethical duties, political pressures. It's way more complex than just designing the next-rate chip.
It's a multidimensional challenge for sure.
Okay, so let's try to bring this all together. Our deep dive into NVIDIA's 2025 meeting documents. Well, it paints a picture of a company that is just undeniably central to the AI revolution.
Absolutely. The financial performance is stunning, mostly thanks to that data center boom.
Yeah.
And they have a very clear strategy, this full-stack computing infrastructure vision.
And they're clearly grappling with corporate governance.
Yeah.
Focusing on board diversity, pay for performance, but also pushing back on some shareholder proposals related to control. It's dynamic.
Right. And beyond the boardroom and the balance sheet, there's a strong stated awareness of their people, human capital, their environmental footprint, and the huge ethical weight that comes with developing AI.
It really seems like this incredible growth story is running parallel to this growing complexity. Global operations, shifting regulations, ethical minefields. It's a constant balancing act.
A very delicate one. Which kind of brings us to a final thought, something for you, the listener, to chew on after all this.
Yeah. Given NVIDIA's stated commitment to trustworthy AI and the fact that they're still innovating at this breakneck speed, how is this escalating global regulatory scene, these geopolitical tensions? How is that going to shape not just their profits, but the actual nature of how AI gets developed in the years ahead?
That's a big question. It really cuts to the heart of where tech is taking us, doesn't it?
It really does.
Yeah.
And it's something we'll definitely all be watching very, very closely.
Thanks for tuning in to Know What You Are Investing podcast, where we decode the world's top companies, what they do, how they grow, why it matters. We hope you now see NVIDIA not just as a chip maker, but as a foundational force in the AI-driven global economy. If this episode brought you insight, don't forget to follow, share, and leave a review. Until next time, invest with clarity and confidence.